Okay, I just want to take 2 minutes of your time to show you the benefits of becoming a member of the Green Star Trading Patreon, all the various things you can unlock. So here we are on the Patreon page as you would see it as a prospective customer. So let's just scroll down before we discuss the tiers and have a look at what I've done recently. So if you were to become a patron today, you could potentially unlock 150 exclusive posts, and most of them are going to be video content. For example, I recently did a video for my patrons on bond ETFs. Is it time to buy? Interesting subject. Had a lot of interest from this on the Discord. We've got the most recent live stream from last week. This went on for 4.5 hours and is timestamped on YouTube. We discussed a whole bunch of assets, and the great thing about the live streams is if you request a certain asset in advance, I will find time to look at it. Okay, now I don't care what it is, it could be anything of your choice. I'll try and find time to look at it. We've got a recent Bitcoin video that wasn't available on YouTube as well, where I wanted to go over a few future ideas. Another live stream for you to look at. Another video here, for example, of what I look at in a company. This is going over the financials of companies and how I basically want to assess the health and the value of a company and a stock and the kind of things I look for. And then we've got another live stream here. Then we've got our SCS trades and portfolio monitor. This is a little Excel spreadsheet to help you manage your trading. We've got a few of those as well for you to download, and an explanation of how to use them. We've got a video here on the TLT and the 20-year ETF. None of this, of course, has been available on YouTube. So if you want to become a member today, you'll get access to all that stuff, plus all the educational videos, but it depends on which tier you join. So let's just very briefly run through those. Tier 1, for £5 a month, you will get a exclusive video each week that is not available on YouTube. Tier 2, you get that same video, but you also get access to the public Discord where you can interact with hundreds of members, ask me anything you want. There's an Ask Tom channel there where you can talk to me directly. That's also where you can make requests for the live streams, you can share ideas with one another, and access all the educational content in a nice, easy, playlisted manner as links to YouTube. And then tier 3 is everything in tier 2, everything in tier 1, plus a monthly dividend calendar and stock rating system, and a monthly video for those members to break down the companies I'm most attracted to in those stocks that month. So those are the benefits you can get for joining up today. Please consider it, but I would beg you to leave it to the start of the first day of a new month, because Patreon does not charge pro rata. It will charge you twice. If you sign up on the last day of the month, you'll get charged on the first day of the next month. So please feel free to sign up. We're looking forward to having you on board, but just leave it to the 1st of October in this case, and the 1st of each month if you're watching this advert in the future. Alright guys, thank you very much for listening. Now let's get back to the video. Hello everybody, and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for an update on the SPY, which is our proxy for the S&P 500. We're also going to look at the PCC, and we're going to look at the VIX as well. Right then, so there is a change of the counts the same in terms of the different counts we've looked at. We've had to adopt a new primary. We've got to dump the bullish count as it's now been invalidated, which also means we have to now find a new alternate for the new primary. So a few things to do today. But before we get into that, I just want to do some classical analysis first, okay, and point out a few things on the chart you've probably noticed, as they're pretty obvious, but if you haven't noticed them, let's just go over them first. So, essentially looking for potential support. Okay, now we're just going to bring up our FRVPs as well here. So, what do we notice when we look at the chart here? Right, we have a demand zone here. Previous buyers came in and brought up these lows here and here. We have our point of control in our volume profile of this entire impulse to the high, here, yellow dotted line. We have our 50% fib retracement at 351.23, and we have our golden ratio at 320.85. We have support level of the previous 2020 high back at 338.84, and we have another support level, these prior lows and these previous highs, at 323.32. So we have got massive support confluence in here, right? So many confluent factors all screaming for support in this area here. So we've got that demand zone, we've got those support levels, we've got our point of control, you know, we've got our golden ratio and our 50. It's all in this box. Now I'm sure you probably all noticed that, but I just wanted to reiterate that first. Now why did I want to make that point first? Because everyone seems to be getting awfully bearish at this recent low. Now there are certain people after years of trading and being in the market, I've come to notice, have a habit of getting bearish at lows and bullish at highs. One of them is our bud JC over at Mad Money. Now, he's not the only one by far. I had to listen to a roundtable, or I didn't have to, I chose to listen to a roundtable discussion between multiple so-called experts just last week, talking about how the market's likely going to fall from here, things are going to get worse, market's going to collapse, blah blah blah. They were all very bearish, so he's not alone, but he's notorious for calling the lows by becoming bearish at them. So that's the company you're in now if you're bearish. Let's just keep that in mind. Now, I'm not saying we can't come lower. I think we have to come into this zone, okay, in order to find support. I think that's likely. We are already kind of at it with the previous highs, okay, around September 2020. That could just be enough, but I think maybe come in a fair bit deeper. Now, all the way down to the 65 here, we've got another 12.5% decline to 312.6 on the SPY. So this could still get pretty nasty from here, but it may only be a few percent into here. So let's have a look at our indicators on the day time frame. We're getting very oversold. The most oversold we have been since January this year. That's how oversold we are on the daily time frame now. We have some bullish divergence building up between the prior low and the current low. Now, that's not saying the low is in here, the current low is in. It could just, I should say, between the prior low and current price. We have an extremely bearish trend in the OBV from the accumulation of negative volume. We can see that. No one's arguing that. That looks bad. The MACD doesn't look much better either, although some of the bearish momentum has slackened off in this latest move down. It's not as strong as the prior push down was. So those are the points I would want to make. We're oversold coming into support, getting extremely bearish when making new lows. Historically, it doesn't matter whether we look at 2020, whether we look at the lows in 2018, whether we look at the lows in February 18, you pick the date, right? Getting very bearish when we make new lows is often not a good idea. Okay, now hindsight's fucking marvelous, and in 2020 we can all 2020 vision we can all say these are where you want to be bearish, and the lows is where you want to be bullish. Now, easier said than done because we don't know exactly where the lows are, but I think it's a bad habit of the pessimists to get more bearish as we head lower, when really we should start to think the opposite. Now, no sign yet of us turning around, so let's not jump the gun. I think coming down into here makes a lot of sense. I think coming back to at least test this for temporary support makes a lot of sense. So whether we bottom here, or whether this is temporary bounce back up before we push lower, here is where I think we are going to find some support, either for a multi-month rally before rolling over again, or for a low. That's just my opinion. That's how I see the chart from a classical analysis point of view at the moment. There's one other thing I also forgot to mention there, which is in this support zone. Let's come out to the weekly time frame for a moment, and let's bring up our moving averages. Here's the 250-day exponential moving average. In this case, 250 weekly exponential average. This is straight in this zone as well, just below where we are. Okay, and this is essentially on the longer time frame what we check on larger corrections. Now, we haven't touched it yet. We broke it in 2020. I think we broke it in 2011 last. Yes, we did, and then also in 2010, and then we broke it on the way down during the GFC. Now, let's take a look at the weekly price action during the tech bubble burst and the GFC. A lot of people are saying kiss of death on the daily time frame. It's a phrase where people say you hit a previous moving average and then you collapse. The 250 on the daily, you could argue, serves that purpose as the 60 does on the weekly, but the real kiss of death comes when you break the 250 on the weekly. So let me show you what I mean. Come below the 60, this would be the 250 on the daily, and we break down to the 250 on the weekly. Back up to the 60 on the weekly, break the 250 on the weekly, come back up and test it, get rejected, and then fall to new lows. Same here again. Down to the 60, test it, found support. Down to the 60, test it, found support. Down to the 250, test it, found support. Back up, down to the 250, test it, found support. Found resistance at the 60, got kissed goodnight, through the 250, back to the 250 support, fuck off. Right? that's when the market goes, oh my god, we're done. We are not there, guys, not yet. Okay, now I'm not saying we couldn't be. We could be in for a shellacking. Okay, that's possible. Let's go through the process we've seen so far. Down to the 60. Sorry, I've jumped the gun there. Let's get rid of the FRVPs. Down to the 60, test it for support, back up to the 10 and 20. Down to the 60, break it, test it for support, back through the 10 and 20. Down through the 60, back up, test the 60, fall down to the 250. We've got the 250, support, demand and everything here. If we are in a smaller wave degree, we want the bottom in here and get out of here. Now if we don't, there's the possibility that we push our way through the 250, we come back up to test that 60 again, down through the 250 again, back test it, and then it's good night. As you can see on this scale, if we were to do the same process again, we've got those two back tests and swings to come if we were to do the similar pattern again, and then yes, it's good night at that point. And you know, you better be short by then, or you better be hedging by then. Now I don't have any problem with people who've been at all with lightening up. Lightening up throughout this whole rally was a sensible thing to do. Lightening up through these rallies was a sensible thing to do. But actively being aggressive for what we're talking about, GFC level calamity, I think by the time that arrives, we'll be at another level of panic. We'll be at another level of pessimism. Okay, so I still think we've got quite a way to go yet before we get there. Now, actively trading on the shorter time frames is what I've been encouraging in this volatility, shorting and longing when the opportunities comes. But it's not dead yet. So just the whole point of what I'm saying is, having looked back at that previous price ace, is just check your pessimism. Okay, because we're not there yet, and there are some voices out there which are notoriously good at calling bottoms by being bearish at them, and that's what we're hearing now. I'm totally open to the idea of that scenario playing out, but we're not there yet. Okay, so there you go, that's the classical analysis done. I know it's taken a little while, so now let's tidy up the chart and let's talk about the current counts, which could accommodate finding support in all these levels here, all these things we've noticed: the 250, the 50 and the 61.8, the support, the point of control, and la-di-da-di-da. It's all in this green box, right? All in here. Well, the count I've got that supports it, which was the alternate, is now the primary, which is a zigzag into a W, flat into an X, zigzag into a Y, zigzag into an X, zigzag into a Z. It's a triple zigzag. A and B done, 1, 2, 3, 4 on the way, and 5 to come in the C to find this support level. Volume will increase into the lows, pushing for maybe even more oversold conditions or stronger divergence on the weekly time frame, bullish divergence to occur as we make this low on our weekly momentum indicators. All of that, I think, is a good sign, a good possibility of the bottom being in here. If we get that big rally out of here, we'll be looking for 5 waves as an impulse, and that will give us confidence that the market's bottomed. Okay, so this is the primary, looking to get down, back in to all of this prior support, all down here. Right, so now that we've got a primary, and we've discussed this before, let's now discuss an alternate. What if, and something which makes me a little suspicious, if I look at the way we've channeled here, and I look at the way I try to frame this, let me get rid of this box now, we know what we're talking about. Let's take, for example, our pitchforks here, and let's go through various kinds. Original pitchfork off of this pivot finishes somewhere around the median line, and then we move way outside of it, back test it, move up, and are now starting to fall back into it. This suggests that this whole thing here was a single move. I'm totally open to that idea. It just means reinterpreting the count slightly. Now if we take the pivot here rather than here, these are dominant pivots, swing high, swing low, swing low, swing high in this case. It contains it very well, and we break it again. Now we're using an original pitchfork there, so we would have really ideally liked to have been able to place this off of an impulsive move down. Mod pitchfork, depending on where we place the pivot, still containing the correction, coming to extreme levels, up to the top, getting rejected. Take our classic shift pitchfork, not quite as good a fit, even worse fit off of this pivot. Possibly, we've got, obviously I pointed out before, simple downward trend here, and we're expanding, possibility of the expanding diagonal idea. We'll talk about that again in a little while. But what if this is one move? Okay, so this here is one move. This is a deceptive move, and then this will be the killer. That's just an idea. So what if we're looking at something like this? This is all zigzags as I suspected. This is a flat as I suspected. This is a zigzag as I suspected, but it's of one smaller wave degree into a W. Rather than all of this being WXY at intermediate, this is WXY minor into intermediate. Right, so we're using double zigzags to replace the use of a single zigzag. Now some people don't like that, but as long as it's functioning as a double zigzag or a zigzag should, I'm totally cool with including it. Now in that case, this could be seen as free, A, B, C, with 5 little waves in the C. Right? It helps explain why this looks more like 3 than 5 in terms of the pivots within it. So if this is free, then this will be free, right? And it will be expansive because it's a wave B. From there, we'll get a surprise rally of 5 to a new high. And that's the C. A, B, C, X, then a zigzag down. Now this would fuck the highest number of people over, pardon my language, because let's say we rally out of here, then this has done enough to convince me of my primary count into support. We come out in 5, brilliant. I think we're bottomed, but this 5 could be a C, right? 3, 3, 5, and that's a flat pattern. That's going to fool the bears. That's going to fool the bulls. It's going to hurt the maximum number of people. So that's now my alternate count. Now you could say, well, maybe if you explain it like that, Tom, you should have it as your primary. Maybe. The problem is, if we are getting another zigzag off of the back of this double zigzag, that, depending on its depth, I want to see double zigzags push price lower. That's the whole point of them. I don't think this is a sideways combination or a sideways flat. It isn't. So if that's the case, we're going to break everything I was just saying shouldn't break. Yeah, we're going to go through all of that support. We're not going to get a secondary bounce. That doesn't really support my primary idea of getting an impulse out of there. So since I've still got a slight bullish bias, bearish in terms of coming down in the short term, but a slightly bullish bias given my macroeconomic view that I've discussed with our members on multiple occasions about inflation, raising rates and all that stuff, then I feel I'm going to stay with the WXYZ until I see something out of here. I need to see something out of all this support. Right, that alternate I think is a higher probability than the super bearish count, that this is a single zigzag or double zigzag. In this case it's a sharp into W, sideways into X, sharp into Y. That'll be our alternate now. Finally, there's the bearish count. Now this would probably fit the retests of 60 EMA and 250 EMA on both daily and weekly time frames to get that so-called kiss of death that we saw in the GFC, that we saw in the tech bubble. But essentially this is an expanding diagonal that pushes us into 5 waves into an A, then a B, then a C. And if we've led with a diagonal, we're likely, doesn't have to, but we're more likely to get an impulse in the C, and that could be very, very, very nasty. Okay, now that's for when we need to come all the way out and consider these lower supports, right, that we've seen in the past. These lower supports, these lower demand zones. And if the situation does get that bearish, we can talk about it as and when we get more evidence. So just showing you those to show that the idea of a total collapse is in the back of my mind. I'm not, I'm sorry to exhale in a kind of despairing fashion. I find it difficult sometimes to try and keep a level head when everybody gets angry at you for trying to do it. It's one of those things where it's like, stop being bullish, it's obviously bearish. Well, you're going to miss every market low that ever happens if that's your attitude. You're never going to see the low because all you see is a black pit of doom, and you're never going to see the light at the end of the tunnel. And if that's your attitude, you get stuck shorting the lows. I've seen it. Okay, but then again, if your attitude is, it's just a temporary correction. It's just a temporary correction. We are going to the moon. We're going to the moon. You know, you're never going. You're going to miss out on all the volatility of trading that correction and that move lower as well. And you're probably going to leave yourself overexposed. So there's problems both ways. I'm just trying to keep an open mind. So there you go. That's the primary. That's the alternate. That's the doom scenario. Let's talk about this doom scenario for a minute. My biggest issue is this subdivides as a zigzag. Right? This does not subdivide as an impulse, so calling it A from the very word go is problematic. And I've had that issue from day one. I've come in here to find a subdivision. There's no five-way subdivision in here. So going 1, 2 is wrong, and going A, B appears to be wrong. But when the large account is measuring up and breaking down, I'll give it the benefit of a doubt that it's there, but it's just not there. That's all I can really say. My own count at the end of the day relies on the actual shapes occurring. That's a zigzag, that's a zigzag, this is a zigzag, and so on. So I prefer it, that's all. Right, so there's the bullish and bearish counts. We've got a PCC extreme marked here. I think we've come higher. I'm going to leave it there until we confirm, so let's go do that now. We're going to come over to the PCC. So here's that PCC extreme marked with that low which led into this recent rally. We backed off on the put to call ratio. We've come back up to that descending trend line which we did break with this move higher. We're back at it again now. If we make another high, I will mark the next low as the PCC extreme as we get it, and I will delete this one. Now the reason it's going to stay here for the moment is because of the possibility of it being a three-way swing with a new price extreme in the B. A, B, C, and so therefore from a technical perspective this was the major pivot, even though we went lower, and therefore this PCC extreme makes sense here. If we go higher on the PCC and get another low, I'll mark it here instead. Okay, now if things get considerably worse, breaking out of this range that we've been in since the GFC is a possibility, and the whole thing could just fucking melt down and go crazy. Right, we've seen it before. At the moment we've got lower highs and we're still in that trend. Okay, so let's not, you know, go crazy just yet. Right, we've still got some work to do to see this really break down. Now the odd one out in this whole process is the VIX, because the VIX just doesn't want to wake up. Right, we've had events of fear of double dip recession in 2011, right, fear of temporary recession in 2015, interest rate spike in 2018, COVID in 2020. We've had elevated VIX readings for what appeared to be far less potentially disastrous scenarios than we might be facing now. And the VIX just doesn't want to wake up. You know, this is the greatest peak we've had, and this is back in January. It's still suppressed. It's just not backing up the data that we're seeing. Now, if we get a spike in the VIX, a breakout of this contracting pattern we've got here, and we got another rally to come, potentially in the S&P, right, and then we get that breakout, I would expect to see all hell get let loose. At that point, after another rally, if we get that breakout in the VIX as we roll over, then you could really see the shit hit the fan. So, but we're not, you know, we're still seeing signs that we've done enough to have bottomed. So it's a bit of a contradiction, I know, guys, but there you go. So a lot to still see yet. Primary is that we've got to finish this zigzag down, that we've got to test all of this support, we've got to test all of this zone here, and we've got to come down into this level to find support. That's what I'm thinking. Going to come into here, find support, and then we're going to bounce. Now, is it a 5-wave head fake of a C before heading lower? Well, let's see what the next month or two macroeconomic data brings us. Does inflation start to tick down in the United States? Does it appear that the economy is moving into a much stronger recession? Does it appear that contraction is accelerating? If all those things turn out to be true, after finding support in here, that could be well be signs of the Fed preparing to pivot, realizing that they've overdone it, they've over tightened. Now, we don't know any of that yet, so we've just got to wait patiently and see what happens. But my only argument would be, heading into major support, potential major support on oversold conditions. So screaming like little chicken little now that the sky is falling. This is not the best time to be doing it from a technical analysis point of view. That's all I'm going to say. So just be aware of the company you're in by getting bearish at the current lows. Now, coming lower into this, fair enough, shorter term, but getting like end of the world going to fall 2,000 points from here in the Dow, or like 100 points here on the SPY, that to me does not seem like an appropriate time to be getting bearish, at least in the next few months. So, alright then guys, there you go. That is, sorry to waffle so much, I know I've been going back and forth a lot in this video, but I just wanted to point out these levels, point out how we can get to them, and the various counts we've got to do it. So that's the way I see the SPY at the moment, and that's the best I can really do for you guys. So thank you very much for joining me in this technical analysis of the SPY. I hope you've enjoyed it. If you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated. I could not do all this work without your help. And if you want to show your appreciation, or if you want to get all the extra benefits we spoke about earlier, and join the Patreon, there's a link in the description box below. Head over, have a read of the tiers, and feel free to sign up. It's still early in the month, you'll get a full month's value out of it. If you're not following me on Twitter yet, please do so. There's a link in the description box below as well. Alright guys, take care of yourselves, and I'll be back with you as soon as possible. Bye bye.